Imagine waking up one morning and discovering that the most valuable form of money isn't gold, isn't cash, and isn't even something you can physically hold. It's not printed, it's not mined, it's not backed by any government. And yet, this invisible currency now dictates global trade, moves trillions of dollars per day, and quietly decides the fate of entire economies. Here's a mystery. How did something that doesn't even exist in physical form become more valuable and more trusted than the metal humanity has worshipped for 5,000 years? This shift didn't happen publicly. It wasn't voted on. There was no global announcement. It was silent, invisible, engineered through a chain of decisions, crises and financial experiments most people never heard about. And today, you're going to see exactly how it happened and why the world may never go back. For most of recorded history, gold was the unquestioned king of value. Empires rose with it, armies marched for it, nations stored it as the ultimate guarantee against chaos. In the early 20th century, if a country wanted respect, stability, and credibility, it kept its promise. Every unit of money it issued could be redeemed for gold. But behind the scenes, economic thinkers, central bankers, and politicians were beginning to realize something uncomfortable. Gold was powerful. Gold was slow. Gold was heavy. Gold couldn't scale with the new world they were building. And in their pursuit of economic speed, endless growth, and centralized control, a new form of money quietly emerged, one that didn't require mines, vaults, or ships. A form of money based on trust, not metal. Code, not minerals. Permission, not nature. We call it digital money, but that term massively understates what it truly is. This is the story of how it rose and why it overtook gold without a single shot being fired. To understand the silent shift, we need to go back to the 1960s, long before the internet, long before crypto, long before the idea of cashless society became mainstream. Banks were drowning in paperwork. Every check, every transfer, every balance adjustment required manual human labor. So, the banking industry invented something radical: electronic ledger systems. At first, they were simple, just digital copies of paper records, but they held the seed of something much bigger. A world where money no longer needed to physically move to exist. These early systems were adopted for convenience. But convenience creates dependency. Dependency creates inevitability. While commercial banks were digitizing their balance sheets, central banks were facing a crisis of their own. The US dollar, then backed by gold, was being printed faster than gold reserves could justify. Countries like France began demanding real gold in exchange for their dollars. But the US didn't have enough. And in 1971, President Nixon made a decision that forever changed the nature of money. He closed the gold window. No more redemptions, no more backing, no more metal. This was not just an economic decision, it was a technological one. Because once money no longer needed gold, it became free to evolve into something else. Something faster, something lighter, something digital. This is where the silent shift truly began. 1970s, 1980s, SWIFT, chips, and the global digital grid. After the gold standard died, the world needed a new financial operating system. Paper was too slow, physical settlement was too risky. So bankers created the invisible highways we still rely on today. SWIFT messaging for banks, CHIPS clearing for large payments, Fedwire, instant settlement for US transactions. These networks did something extraordinary. They made money move at the speed of information. By the late 1980s, digital dollars were flowing around the globe in milliseconds, long before the public had credit cards or home computers. Most people don't know this, but by 1990, over 80% of all US dollars existed only electronically. The digital financial system had already replaced cash quietly, globally, and irreversibly. But something else was happening underneath the hood. The invisible expansion 199OS2008. Banks discovered a secret advantage of digital money. It can create far more of it than physical money, and no one notices until it is too late. Fractional reserve banking multiplied electronic dollars. Derivatives amplified them. Credit markets duplicated them. Mortgage securitization weaponized them. Digital money wasn't just replacing gold, it was outgrowing it exponentially. The world became addicted to leverage. Debt outpaced GDP in almost every major economy. The financial system needed constant credit expansion just to stay alive. And then everything snapped. When Lehman Brothers collapsed and global markets froze, the world wasn't just facing a recession. It was facing a revelation. Digital money could disappear with a keystroke. Trillions of dollars of credit simply vanished, not because factories burned down, not because gold was lost, but because digital promises failed. This exposed a new reality. Gold had physical limits. Digital money had no limits. And the system was now dependent on the unlimited side. To save the world economy, central banks printed digital dollars, not billions, but trillions from thin air. No gold, no assets, just database entries. For the first time in history, the world saw that money creation required no metal, no machines, no resources, only permission. This was the moment digital money became too big to fail, and central banks quietly accepted it. Central banks effectively admitted that money could be created infinitely as long as the system believed in it. Key wasn't printing money, it was manufacturing trust. Zero interest rates money became so abundant that borrowing became nearly free. Negative interest rates money became so abundant that holding it cost you money. These were not financial tools, they were experiments. Experiments that would never be possible with gold. Digital money had unlocked something gold never could. Total control. A central banker could move markets with a sentence. A glitch could freeze global payments. An algorithm could outperform bullion vaults. And yet, this was only the beginning. Governments tried everything. Tighter regulations, capital requirements, macroprudential tools. Monetary policy targets fiscal interventions. None of it restored the stability gold once provided. Debt kept expanding. Asset bubbles kept inflating. Digital money kept multiplying. Because the problem wasn't interest rates. The problem was structural. The world rebuilt its entire economy on a money system without physical limits. It was only a matter of time before something broke again. And it did. In 2020, when the entire world shut down in March 2020, something staggering happened. Governments didn't just stimulate their economies, they rewrote the rules of money creation. In the US, 35% of all dollars ever created were created in 12 months. In Europe, the ECB doubled its balance sheet. Japan printed so much that its central bank became the largest shareholder in its own stock market. This wasn't a rescue. This was a transformation. Digital money became the primary tool of survival. Governments realized they could do what kings, emperors, pharaohs never dared to do: create value without physical backing, instantly, globally, and invisibly. From that moment, digital money surpassed gold, not just in usage, but in power. Gold protects wealth. Digital money controls economies. And control always wins. Let's look at the world we live in right now. 1. Over 97% of global money exists only electronically. There are more physical PKMN cards than physical dollars in circulation. 2. Global debt crossed $315 trillion, a level impossible under any physical monetary system. 3. The average central bank can create more money in a week than all global gold mines extract in a year. 4. Digital currencies, from CBDCs to stablecoins to Bitcoin, now compete directly for monetary power. 5. Gold demand is rising. But physical gold ownership doesn't increase monetary influence. The system no longer measures value in ounces. It measures it in liquidity, speed, and control. And digital money excels at all three. But here's the twist. Not all digital money is equal. Some forms are centralized, some are decentralized, some are programmable, some are permissioned, some can disappear with a click, some cannot. The war for the future of money has already begun, and most people realize they reliving inside it. Every major monetary shift in history follows the same pattern. A system becomes too rigid for its era. Gold-backed money couldn't keep up with globalized finance. Technological innovation creates a faster alternative. Digital ledgers replaced metal. Crises exposed the old limits. 1971, 2008, 2020. The new system absorbs all power. Digital money became the operating system of the world. History didn't break the pattern. It amplified it. 3 takeaways. 1. Money is no longer a physical object. It is an operating system. Gold had weight. Cash had form. Digital money has code, and code can be changed instantly. 2. The value of money now comes from permission, not scarcity. Who controls the ledger, controls the world. The system doesn't reward the rare, it rewards the centrally managed. 3. The next monetary shift will not be about replacing money, but replacing who controls it. CBDCs, stablecoins, crypto networks, this is the new battleground. The silent shift that made digital money more valuable than gold didn't end. Still happening, accelerating, deepening, tightening. Every crisis hands more power to the digital system. Every bailout increases dependency. Every new technology strengthens central control or decentralizes it, depending on who wins. The question isn't whether digital money will dominate. It already has. The question is who will control the next evolution of it? Governments, corporations, or the public? That answer is still being written. If you want to follow the hidden patterns, the historical cycles, and the financial secrets shaping the future of money, subscribe to the channel, hit the like button, and turn on notifications. Because the next videos dive even deeper into the forces quietly rewriting the global economy. Thanks for watching, and remember, money always tells a story, but only if you know how to listen.